All right, today we're diving into something big, a real shift in climate policy. Think of it as a showdown. The old way of doing things, carbon markets, versus this powerful new rulebook called CBAM. And this really gets to the heart of it. For decades, the thinking was, let the markets figure it out, right? Let them put a price on pollution. But what if that price is no longer set by traders, but by border guards? I mean, what if it's basically a tariff? That changes everything. For the past 20 years, carbon markets were pretty much the answer. The idea was beautiful, really. You set up a system like cap and trade, and you let the market find the cheapest, most efficient way to cut emissions. It was all about those price signals and, flexibility.
But now, a new challenger has stepped into the ring, and it's a big one. It's the EU's Carbon Border Adjustment Mechanism, or CBAM for short. And let me tell you, it is not here to play by the old market rules. This thing is an assertive, top-down regulatory tool. It literally hard-codes carbon costs right into the price of goods at the border.
So what we're really looking at here is a fundamental conflict. It's a clash of two totally different philosophies on how we should even be tackling climate change. Okay, so look at this. This really breaks down the two different ways of thinking. On one side, you have the market logic. It's all about prices moving with supply and demand. It's about flexibility, finding the best deal. But then you have this regulatory logic from CBAM. It's totally different. The price is fixed. It's deterministic. It's all about rigidity and compliance. And this is key. It only cares about the product itself. And that's where this term embedded emissions becomes so important. So what does that mean? Well, under CBAM, a steel company can't just say, hey, we polluted here, but we paid to plant some trees over there, so we're good. Nope, it doesn't work like that. The only thing that matters is the carbon footprint that is literally baked into the steel that shows up at the European border.
So how does this thing actually work? How does it force a price on everyone else? Let's get into the mechanics of it.
Okay, so the first thing to get is that CBAM isn't creating some new global market. Not at all. What it does is it looks at the carbon price inside its own market, the EU's emissions trading system. And it basically says, okay, that's the price. That's our benchmark for anything you want to sell to us. All right, let's put a number on this to make it super clear. Let's just say, for argument's sake, that the EU's reference price is 90 euros for every ton of carbon. Now, this table shows you exactly how this becomes an unavoidable price floor for the whole world. So look at that first row. If you're an exporter and your country has zero carbon price, guess what? You're paying the full 90 euros at the border. Simple as that. Now, what if you're from a country with a low carbon price? Say you've already paid 20 euros back home. Well, you just pay the difference. You pay 70 euros to the EU. The bottom line, and this is the absolute kicker, is that one way or another, everybody ends up paying that 90 euro price to access the EU market. There's no way around it. So, when you introduce a system this disruptive, you're going to create a whole new set of winners and losers. It's inevitable. We're talking about a genuine shift in global power. So let's break that down. Who wins in this new world? And who gets left behind? So first, the winners. Think about the companies that saw this coming, the ones that invested early in cleaner tech, and, this is just as important, invested in systems to actually track their emissions accurately. All of a sudden, they have a massive competitive advantage. Those investments they made years ago, they're paying off big time now. And you know who else wins? Regulators. Governments now have this incredibly powerful new tool. They can enforce their climate policies through trade without having to go through years of painful, slow, complicated international negotiations. It's a huge power-up for them. Okay, so on the flip side, who's feeling the heat? The voluntary carbon markets, for sure. Their whole model is built around offsets, right? But in this new world of regulated trade, that becomes way less relevant. Why? Because buying an offset doesn't actually change the embedded emissions of the physical product you're trying to sell. And this is probably the toughest part of the story. The big losers here are often developing economies. Imagine you're a country that's just starting to build its own carbon pricing system, maybe a low-cost one. Suddenly, CBAM comes along and basically steamrolls your domestic policy. It makes it incredibly difficult to plan your own industrial future. So, where does all this leave us? This massive shift from a market-based logic to a regulatory one makes you wonder, right? Are we actually moving into a post-market era for climate policy? There's a quote from the source material that just hits the nail on the head. Carbon strategy becomes operational rather than financial. Think about that. The game isn't just about clever financial moves on a trading desk anymore. It's about what you're physically doing on the factory floor. So if you're, say, a steel producer, your whole playbook just got ripped up and rewritten. It's not enough to just buy some offsets anymore. Now you have to focus on physical decarbonization. We're talking about upgrading your actual furnaces. You have to invest in super detailed data so you can prove the carbon footprint of every single product you ship. And what this means strategically is that your number one priority becomes keeping access to that huge EU market, not finding some cheap financial workaround. The center of your climate strategy literally moves from the trading desk to the heart of your factory. And that leaves us with a really big final question. For 20 years, the assumption was that markets and prices would lead the way on climate. But CBAM suggests something else entirely. It suggests the future of climate action might be driven less by prices and more by pure, raw regulatory power. It seems like a brand new rulebook is being written. And well, we're all going to have to learn how to play by it.